Hey guys, welcome back to the Maximilian channel. In today's clip I'm going to take you through what is backtesting and my top tips for backtesting and key considerations when doing it. Now there are a lot of backtesting comments thrown out there and a lot of people do know what they're doing, but there's also a lot of people that have contacted me asking what it is and how they actually go about, or how about they go about improving it. Now the principle is very simple and straightforward, but if you don't do it with any structure, you may as well not bother doing it at all. Now I know that some people are really skeptical about backtesting and how good it actually is and how much it can really affect your trading, and I too was one of those people until I'd integrated it into my trading system, and I do honestly now believe that it can really make a big benefit to you and your confidence as a trader. Now of course it may not be the only thing that is going to get you to being a successful trader and a consistent trader, but let's be honest, there is no one thing that gets you there. It's the multiplication or the combination of all the little things that make a massive result, and I do believe that this is a key component that most people should integrate into their trading system. So in these backtesting videos, I'm going to split them into two videos. Now in this video I'm going to run through what it is just for the complete beginners, but mainly focus on the key tips and key considerations that I feel are of benefit when adding backtesting to your routine. Then in the second video, I'm going to take you through a complete live backtesting session with me so you can see it with a full screen show and understand how I go about it myself. Now backtesting is the same as journaling, and everybody has an opinion on how to do it, and oh, you should have added this, and oh, you should have added that. The reality is I'm just going to show you what I do and the key tips that I feel have helped me, but feel free to put your comments below for any additional tips that you think would be useful for anybody viewing this video. Now on this channel I do try to create videos for all levels, and in this video obviously this is going to be more targeted for people that are starting to get into Forex, people that are currently in Forex but struggling with consistency and profitability, and maybe people that haven't yet put backtesting into their system, or if they have, they're not finding many results and maybe just want to steer and an idea of how other people may do it. Now if you're pretty confident with your backtesting routine, then feel free to go and watch one of my other videos, not unless you want to kick around and just see if there's any value tips that I bring that maybe you haven't considered before. My next two videos though, I like to consider my FTMO account management strategy and also a trade breakdown or a couple of trade breakdowns to really demonstrate my strategy and how I go about trading. So keep an eye out for those. Cool, so just before we get started, as always, please guys, if you are enjoying the content, just hit that likes up button, subscribe to the channel if you aren't already, and be sure to hit that alert button to make sure that you're notified for when I do post my next video. Okay, so let's get to it. What is backtesting and what are my key tips to find the best chance of success when doing it? Now very quickly, just for the complete beginners, what is backtesting? Backtesting, put simply, is basically having the ability to go back through historic data and trade it as if it were live. So it gives you an idea of what it would be like trading in live market conditions without risk, but also giving you a good idea of how well a strategy works and how it would have worked had you trade it over that period. It essentially allows you to feel as close to the live market as possible, but trading within recent history so you would have known how your trades would have turned out. Okay, now the other question is, and this is even for sort of people that have been trading a while, is why is backtesting actually useful? I've heard some complete different opinions in terms of people saying, yeah, it's no good, it's a waste of time, I've not bothered and I'm making millions of pounds. That's great. I mean, at the end of the day, you've got to do what's right for you. But for the vast majority of people that I've seen take their trading to the next level, backtesting is something that has been a big component of that. So why is backtesting useful? I mean, the first key thing and obvious thing is when you're actually backtesting, you are trading on what was a live market. You're able to go through it bit by bit and trade it as if it was live. You know, when you're going through gurus courses or when you're learning patterns and this, that and the other, you always see perfect screenshots of how a setup was, got right to the point, dropped or broke through or whatever it may be, but it's unrealistic. That isn't how it always looks, and a lot of the time that you find is the price action and the strategies aren't picture perfect every time. So when you're trading on the backtesting, you're used to what a live market is going to teach you. If all you do is go off of the basic screenshots and some perfect playouts that you've seen on some courses, when you start trading the live market, you'll either never take any trades or you just be completely mind blown by the fact that they never appear because they never look perfect. Point number two is it allows you to try out multiple different strategies without any risk, but it allows you to test them over a long period of time so you can understand A, if the strategy works, but B, if it's consistent over a certain period. You can get an idea of how many trades you would take in an average month, what your average win rate is, what your average actual profit is per. So all of these things are massive considerations and things that can give you confidence when moving forward into a live market. And the other thing is just the sheer consistency. You can go through years worth of data and you can understand and see your setups time and time again. It's just going to ingrain into your brain. If you just learn a setup from a screenshot or you learn a setup from a guru that's showing you a video that looks great, the reality is that when you get to a live market, you're not used to searching for them yourself. You're just used to seeing them and going, oh yeah, that works, that's great. But when you're backtesting, the more that you keep doing it on a strategy, you'll keep seeing that over and over and over again, and you'll spot them quicker and quicker each time. So that's going to really benefit you in the live market because there won't be any dithering and you'll be able to get in and get out, and you'll be confident that the strategy works because you won't be second guessing yourself. You'll already know your win rate, you'll already know what to expect from a profit or what from a loss, and you're not going to get too spooked in terms of how much it's going to be in your stop loss and drawdown, for example. Now I'm going to approach the main criticism that most people say about backtesting, but to be honest, most of the people that I hear that don't appreciate backtesting or don't think it works are people that either don't do it, have barely tried it, or people that are just doing it completely wrong. The age-old comment is, it's no good doing it on old data because it's gone, it's not relevant, it's no use testing a strategy on something that's already been, it's the like it and it evolves over time and all this sort of stuff. The reality is that if you were a skilled trader, you would have been trading over that period of time. Let's say you're backtesting 2 years ago. If you're a fully accomplished trader, you would have been trading that series 2 years ago. And the reality is that over the last 2 years, yes, your strategy may have evolved, but the reality is you're probably still trading roughly the same as you were 2 years ago, just with a few tweaks. So to me, it makes absolutely no odds. It's the equivalent of you actually being able to get 2 years worth of experience that you wouldn't have otherwise had being able to trade live markets. And that is my key response to it. Yes, the market evolves, and yes, strategies need to evolve, and in certain markets, certain setups don't work on certain timeframes and whatnot. But that is the same across the previous 2 years as it could be for the next 2 years. You don't know when that change is going to happen. So the more experience you've got in a live market, seeing the trials and tribulations, the more confident you're going to be in a live market of going, okay, you can see an adjustment and you know how to adjust your strategy. Fundamentally, most people's strategies and most people's ideas of entries don't change, they just get tweaked. So for me, backtesting gives you more confidence and more experience within that changing market, and that is the reason that I think that argument is a complete load of bull. Okay, so now let's move on to the key tips, and these are the things that I think will either save you time or things really to consider when getting into your backtesting journey to try and get the most out of it. Now firstly, and this is like second next to most people that are watching this channel, but you do need a charting software that will allow you to backtest. Now I won't go into all the different options, but TradingView is largely the industry accepted one. It's a great piece of kit. You know, you can get a free account, but you aren't able to backtest down to the lower time frames if you've only got the basic account. So what I would suggest is that you do need to pay for the pro version, but you can get a free trial on that so as you can understand how it all works and see if that's a charting software for you. If you haven't got it, I'll put a link in my description below so as you can head over there and sign up. But ultimately, just make sure you've got charting software where you can go back and backtest. Now, this is a key one, and this is something that people usually overlook in their normal trading and they don't journal. Some people are successful for a period of time and they think, well, I'm successful, I don't need to journal. But the reality is journals aren't there to look back at how great you are. Journals are there to see when you started making mistakes and what the commonalities are. Is it a case that, for example, your stop loss was too small regularly, and if you'd had it 10 pips more, then would you have been in more profit? You know, that sort of thing. So really, what I would do is set up, and how I do it is set up a separate journal purely for your backtesting, so you can look back and you can analyze. And then when you do make tweaks and you go back over that ground again, you can understand the differences and see the improvements that you've made. Now, I keep my journal very, very simple and I don't overcomplicate it. I know there's different views out there. I've seen some people with, you know, the Starship Enterprise worth of journal and so much data going on. If it's something that you feel confident with and something that you enjoy putting in and you can dedicate that time to put all of that data in and you're going to stay consistent with it, then absolutely do it that way. The more data, the better. But for me, I know that I get a little bit waylaid and I can get distracted. I might not do it if I have to fill out too many columns. So I keep mine fairly simple. But generally speaking, I would say the things that you definitely need to include, obviously the date that you entered the trade, the enter price, the exit price, the actual time, as in the clock time that you took the trade, the length that you traded it for, the setup that you took, the stop loss you put in, the result of the trade, listing it whether it was a profit, loss or break even, noting the percentage return on that particular trade as well. And also one that I like is your thoughts and rationale, like whether that be your emotions or your thinking behind the move before the trade and also after the trade. But almost the most important thing, so as you can look back on to see exactly what happened and remind yourself, is to make sure that you've got the screenshots of the before and after of your trade. Now the easiest way to do that, if you are using TradingView, is of course to get a link to your screenshot. For that you can just go to the top right, you click on the screenshot button, and then you can copy and paste that link into your journal. Now, the next one is I think you need to stop yourself from cheating on yourself in a lot of cases. Now, of course, to get into the backtesting mode on TradingView, you need to head to the top of the TradingView chart and click on the bar replay tool so as you go into that mode. Now what you can do is click on the go to button at the bottom of the TradingView chart and you can put in the date and the exact date that you actually want to go to. Now if you're going 2 years back and whatnot, this is a great tool because it takes you back to that point. You can then click on that part of the chart and then it will wipe out the chart ahead of it. But by using the go to button, it takes you straight to the date, so you don't see too much of the price action that is still to come, and therefore you don't cheat yourself in terms of knowing that it's going to go heavily up or heavily down, that sort of thing. Now the other big question is how far back do I go to backtest? You know, how many years back does it become irrelevant and all that sort of stuff. Now there's a lot of schools of thought on this, but for me the rule of thumb is never go more than 2 years, but I would advise going 2 years, especially on FX pairs and certain indices that you trade and things like that. Now the rationale behind it is that the last 2 years of data is usually relatively fresh. You know, the market swings and the complete changes of strategies don't tend to change that quickly, and I think that the last 2 years is just fairly current for you to feel and get a good idea. It also gives you a great sample size of data to actually go back through, and you can imagine just how much data that is, if you're going to plan on trading, I don't know, 10 or 15 pairs, or at least back test them to know which ones you're going to prioritize. That's not including cryptos, that's not including indices, it's not including commodities. So, it's a really good amount of time to be back testing, and it gives you a huge amount of confidence heading up to the current day. I mean, the other key thing as well is that, if you're going to data back in like 2008, 2009, and you make a load of money, that's kind of like, in your mind, you're kind of going, oh yeah, that's great, but it was, over 10 years ago. So in which case, who cares? The 2 years of backtesting strategy, especially when you're in, let's say, the last year up until the date, you're actually got the belief that had you been trading this strategy then, you would have made money. So therefore, if it is consistent, you're going to be more confident going onto a live market now and thinking, well, I would have made money last year just like everybody else, and now I'm going to make money this year because I know that strategy works, especially on the most recent data. Because what a lot of people forget with backtesting, it's all well and good saying, oh yeah, 2 years ago, but that is the very start of that backtesting journey. Each time you move forward in your backtesting journey, you're getting closer and closer to the real day. So the closer and closer you are to the real day, if you're seeing your strategy work, you know that really you're going to hopefully get the same success on a live market. Now, one thing to note to people that aren't doing this regularly is that you will only usually be able to go down to the 1 hour chart on most instruments when you get to a certain period behind. You can go down to the lower time frames when you're sort of within the last 3 months and 6 months and whatnot, but just bear that in mind. So don't keep trying to go down to the 15-minute chart or 5-minute chart. So it's just something to bear in mind when you're working out your strategies. But on that note, as you do come into the final month, 3 months and whatnot, and you really can go down to those 15-minute and 5-minute charts, that's where you can really refine your entries. You should take the opportunity that all of those years that you've done backtesting, where maybe you haven't got as refined entry because you've only been able to use the hourly chart, in those recent months you can start using the 15 and the 5 to really refine those entries. Even if you've got a sort of a day trade strategy, an intraday strategy that's going to be mainly based around, say, the 5-minute chart, the 15-minute chart, let's say, and you can only go back a few months, that's still a hell of a lot of data if you go candle by candle. So instead of it being an hour, if you think of 5 minutes, there's 20 5-minute candles to the hour. So therefore you still got a good amount of data, even if it's only in the last few months. And generally when you're day trading an intraday strategy, you're not really looking at so much the larger market sentiment. So it's still a valid exercise, but just bear in mind you'd only be able to go back a few months to do that. Now, the biggest tip that I can say, and this is a mistake that I fell into when I first did it as well, is go candle by candle and carefully consider your options at every single candle before you click to the next one. Do not hit overplay. It's fake, it's a cheat, it's just a complete waste of time. In 10 seconds, you can just see, several hours worth of data just go flying past. And what you find is that you put the autoplay, you go, oh yeah, I'm looking for this, then it suddenly does what you expect it to do. You go, yeah, I would have taken that, and then you put that in your journal as if you would have taken it. That isn't realistic. That isn't getting your mind in the place of knowing what to expect in the market, and also, having that kind of perception and forecasting and all whatnot, to get yourself in a good position. So what I say is, once you click that and you move forward and you're on that candle, you forecast trade or you do whatever you need to do, and you carefully consider whether you're going to take an entry on that candle or if you're not. But as soon as you click that candle and you go forward, you don't move back one and go, oh yeah, no, actually I would have taken it there. You've got to be completely honest with yourself throughout the whole backtesting process, because this is a replication of what you're going to do in the live market. You either get the entry or you don't. You either get stopped out or you don't. So don't cheat yourself on backtesting, otherwise you aren't going to see the results. So even if you only do it 10% of the time, that's still going to skew your win rate and what confidence you can take into that live market, and then your mind will be blown as to why you're not getting exactly the same results. So be completely honest with yourself and make sure that you stick to that every single time, and I can't stress that enough. Let's be honest, hindsight is a wonderful thing, and how many times in the live market have you gone, oh god, I knew I should have taken that, and I knew I should have done that, and if I had done that I would have been up 5 grand, 10 grand, 50 grand today, and all the rest of it. That's great. So why you can't just apply hindsight in backtesting and go, yeah, no, I saw it and I knew, and I'm going to make me feel good. You're only cheating yourself. No one's looking at your backtesting figures, only you, and you're the person that can take confidence from that. So in those scenarios, just admit it, log it as a missed trade, try and understand the reasons why you didn't take it. What were you worried about? What would have made you take it in the future? Or is it just a case of going, right, I knew I should have taken that, so if you see an exact same setup the next time, you're going to take it, and then you can compare, how you've improved throughout that period of time. So admit it, analyze it, note it down, evolve. And that is how we move forward. Now, the next tip, some people have got different opinions on this. For me personally, I think you should only focus on one setup or one entry, or maybe 2 entries, depending on the setup that you're actually backtesting. But I would only go through and do one at a time. Now, if you think that if you're going to test over, let's say you're going to go 10 FX pairs, 3 indices, 3 cryptos and 3 commodities, that is a huge amount of data. So what I would do is I'd do one strategy and I'd go through the 2 years data on one pair, for example, and do as best I could. And then what I'd do is I'd maybe move on to a different strategy on a different pair to keep it fresh, so I don't get used to the market momentum or any sort of short-term memory in terms of where things were going from that period of time. Now, what I feel is that if you keep going at one strategy and one entry over 2 years worth of data, and all you're looking for is that entry, you ignore all your other setups and all the rest of it, and you actually look at what you can do with that one, you will see that clear as day when it goes to a live market. And I do feel that you're better off being an expert in one strategy that you know works, even if it means you can't trade that often, but at least you know what your win rate is and you know that you can often see it. Knowing kind of, being half consistent and being able to see half the opportunities in terms of a trading plan that's got like 10 setups, I think it's fairly irrelevant, and that's where you can make a lot of mistakes, and too much discretion is used in those situations. So my advice is stick to one strategy or a couple of setups that you can just look at and you just solely focus on that. Now I know people are going to contend that, and probably people have put that in the comment section and say that they don't agree with it, but I'm just saying what I felt worked for me, because at one point I was trying to look at so many different setups and they don't look the same. If you're looking for a break and retest setup, you shouldn't then be looking for price action setups with ascending and descending channels and all the rest of it. Focus on one, get good at one, and then move forward. But as I say, if you're going to look for a break and retest methodology on Euro Japanese yen, for example, then just don't go and retest Euro Japanese yen with a different strategy straight away. Go and look at pound US dollar or something that's completely unrelated, like Bitcoin or whatever you want to do, to make sure that you completely eclipse that from your memory, that period that you've done the back testing, so you don't cheat when you're going through with a new strategy. So overall, in short, that's just advice in general. Learn one thing brilliantly. Knowing a load of things with half confidence doesn't usually end well, and that's just from my experience. Now, my next tip, and as I said, you've got to treat backtesting as if it is the live market, you really do. And I would always say that you should be forecasting when you're actually doing backtesting. So if you're seeing some price action start, or you're seeing a setup come into play, then what you need to do on each of those candles going one by one is forecast exactly where you think it's going to go. What are the options? What are the 2 options? What are the 3 options, or where you'd expect to go? And if they were to go in that way, when would you look to take the trade? Getting in this habit means that you are then looking for a key price area, rather than just looking at it as a general and going, oh, could go now, it's roughly in the area. The more that you forecast it, puts it into your brain, and you're looking for a key part. And also, you're not surprised when the price goes in certain directions, because sometimes you could be expecting it to go high and then drop, and actually in reality it just drops out and you think, damn it, I missed it. But if that's the second option that you've seen, you're not actually that put off by it, and you don't get disgruntled, when you've missed that trade. So I do think that every time you're going through those candles, or when you're seeing something set up, make sure that you forecast it, so you're actually seeing it ahead of time, and see how accurate your forecasts are. Because this is another thing, that if you're forecasting in the live market, you don't know what's coming. There isn't data already there to click through to find out. So this forecasting, you need to understand how accurate your forecasting is and how useful it is, but ultimately it will give you more confidence. If you know that 70% of your forecasts and the favored approaches that you would have taken are right, then you know that when you're in the live market, you have that ability to. Overall, makes you less impulsive and makes you more patient in terms of waiting for particular setups in the areas that you think are going to be key areas, and then at the high probability that you feel you're going to get the best bang for your buck once you take the entry. Now, this is one of the biggest tips of all, and one thing that people know but don't actually remember once they start trading the live market after backtesting. Respect the time on the backtesting. Now, this is one big thing where I think a lot of people run short and they go, Jesus, why is my backtested strategy not working on the live markets? Now, remember, when you go through backtesting, and I'm saying click candle by candle and consider your actions, but usually when you're considering all your actions, you're not going to take any more than maybe, let's say, 10 minutes or 15 minutes on a candle where you feel like, oh, something could be happening. And in reality, that candle actually took an hour in real time. So each time you click through, you're clicking through an hour's worth of data on the hourly chart, and 4 hours worth of data on the 4-hourly chart. So if you imagine that in real time, most of the time when you see something forming, or most of the time you see your positions, you'll realize that actually you click through it and it could make, maybe you pass 6 to 8 hours, but you could do that in like 10 or 15 minutes, let's say. But in the live market, you're actually experiencing that time, you're experiencing that price fluctuation throughout that time as well. So your emotions do get overridden. That is why in the journal I say to put how long did you hold the trade for. So if you know that all of your successful trades are roughly held between 6 to 8 hours, for example, most people you'll find are starting to get frustrated on the live market. They put the trade down, it's exactly the same as what they would have done in backtesting, and then 45 minutes later, they're down on the 5-minute chart going, oh God, why am I not in profit? Oh, it looks as though it's going to go back up and it's going to blah, blah, blah. You've got to trust in your process. If you know that most of the things took 6 to 8 hours in your backtesting when you did the strategy and you completely proved it and gave yourself the confidence, you have to sit tight for that 6 to 8 hours. And if it doesn't go right, it doesn't go right. But usually you'll find that it does because it's in keeping with your strategy. But if you don't respect the time and you don't remember that each time you click that button, it can be at least 1 hour in the space of 1 second, then you aren't going to be prepared when you go into the live market. It is also really, really helpful because when you're in the live market and you can refer back to your backtesting journal and go, okay, all the trades that basically went through took 6 hours, it took 2 days, whatever it may be. In backtesting, you don't have that emotional and you don't have that time that you're waiting to see if something's happening. You don't have all the doubts going through your mind. You don't have the fluctuations in price that you're seeing on your MT4. You're just looking at the chart. And this is why most people can be very good in backtesting in the sense that once you get into the swing and you see that your strategy works, you're used to seeing winners going out, but the problem is you're used to seeing winners happen in the space of minutes rather than hours or days. So when you are in one of those spats, and a lot of people message saying, oh, how can I get my psychology right and not cut trades too early and this, that and the other? The trick is to look back on your backtesting journal and remind yourself that all of your winning trades, whether you've got a 40% win rate or whether your average return is 10% a month, if the majority of those trades are 8 to 10 hour holds, look back on your backtesting, take it in, give yourself that confidence and trust in the process, because otherwise you will start cutting things early and you get too spooked in the live market. It'll end up going where you thought it was going to go. You then get really emotional. You start venge trading, upping your risk, blowing your account. And that's pretty much how most people, I think, fail over time, especially because they feel that they've done the work with the backtesting, but it just isn't working in the live market. So just always respect that time, always refer back to it, and always use it as a point of confidence and assurance. Another pretty straightforward tip is just to use the risk reward tool when you're doing any backtesting. Make sure that you plot that on there. So if you think you're going to put an entry in, bang it on there so as you've actually put it on there. You're not adjusting it, so as when the price does actually go in a position, you kind of arrange it so as it looks great. Put it where it would be, put the stop in that you would calculate, and put the TP where you would put it, or roughly where you're looking for it to go. It gives you a great visual to look back on, especially on those screenshots that we were talking about earlier in the video, to take a look at how it behaved. And it gives you a good visual to see how much drawdown you go into through your stop losses and stuff like that as well. Now, this is another really key one that I feel that people overlook, and that is why on the journal I suggest putting the time that you would take the trade. Now, most people could get really excited because backtesting, you've got no sense of time. You're just looking at the charts. You're not really looking at the hour that it would be in. But for example, if you're UK based and you see a great setup on pound yen, but it's actually at 3:30 in the morning, what is the likelihood that you as a person in the UK and with your schedule would have actually taken that trade live? Did you see it coming up and would you have set an order? That's different. But if you're talking about live market execution and taking, I would have taken that trade, look at the time. Because if it is at 3:30 a.m, note it on a separate sheet, see how the trade plays out, and you can go, okay, well, maybe if you see loads of trades when you're profitable is through the Asian session, then maybe you need to think about, especially if you're a full-time trader, like staying up for the Asian session. But the reality is don't put things in your backtesting success or losses that you wouldn't have taken in real life. So always look at the time and would it have been realistic for you to have taken the trade? This also applies to your schedule in general. If you're working full time and you know that you found a trade on your backtesting that's at 9:30 a.m, but you know yourself that every day between Monday to Friday you're in a board meeting at 9:30 a.m, you aren't going to have taken the trade unless you set an order. So you need to be clear that if you'd seen that ahead of time and you set an order, fine. But if you're thinking that you're going to take it at live market execution, then that can't go down as a trade on your backtesting because you probably wouldn't have taken that trade in reality. It's a one that, again, you can keep it on a separate sheet, as to say if you didn't have a full job, for example, or that just to see if your strategy actually worked on the setup. But in terms of the ones where you're taking, a real live version of this backtest and see how it would be live trading, you don't put that down as a profit or a loss. Now, just another quick tip, just to avoid any sort of false hope and anything like this, is if the price comes to within 1 pip of your stop loss, count that as a loss. Now, I know there are certain brokers that have got, completely sort of non-existent spreads and all the rest of it, but a lot of brokers do, and especially a lot of people nowadays are trading with prop firms and they do have spreads. So if it comes within 1 pip of your stop loss on TradingView, count it as a loss because it was too tight and you would have likely been taken out, especially not taking into account even just a little bit of market slippage, you would have been gone. So I think 1 pip is actually pretty generous. I'd probably say 2 or 3, but let's just say 1 as a complete minimum. So you class that as a loss. But what you should do is keep a note of it as well. So when you're actually going back and reviewing all these trades, and that was what I mentioned and inferred earlier, was that when you look, you can see how many actually hit your stop or how many, almost hit your stop because of this 1 pip rule type thing. And then you go, okay, well, if it was 4 pips higher, 10 out of my last 20 trades that lost would have actually been winners and they would have actually hit TP as a result. So that's something you can take away, you can implement in your new live trading or tweak when you sort of backtest again. But it can give you some really good information, but don't fake putting it through as a winner. It's like, oh yeah, I think it would have almost got there, because it's giving you a fake sense of security. If you took that exact same trade in a live market, you would have been stopped out and you would have lost, and then you would be the one questioning, okay, why isn't it working, and saying that backtesting doesn't work. Okay, and the final one is obviously don't do all this in vain. Go back and review all of your backtesting. If you've done, let's say, 6 months worth of backtesting on one pair, get to the end of it, get it done. Following day, come back and look through it all. Understand, okay, what were your thoughts before and after? What were the differences as the time went on? On the successful trades, were there commonalities in your mentality, with your emotions, with the stop loss that you put on? Were they too big? Were they too small? Were you getting stopped out and then the trade ended up going to TP, but you just were too tight on your stop loss overall? All of these different things that you could look at. The time of the trade, when are you most successful trading? What day of the week are you most successful trading? What are the commonalities? You aren't going to take it just from 6 months of data and completely change your strategy or completely tweak it, but it's something to bear in mind, because each time that you build up another 6 months, whether it's on the same pair or a different pair, this is all great information that will take you and give you more confidence going into the live market. So make sure that you do analyze it, even note down your analysis so as you can quickly read through it again, so you don't have to go through all of the data. You can note down the key points. You can go, oh, that's interesting because of the last 6 months that happened, and then now in the latest 6 months of this pair that I've been backtesting, that happened. You know, it's all these sorts of things that are going to really contribute to a long-term, consistent and successful approach towards trading. Okay, and that's pretty much it. You know, I hope that's given you some concept as to why I think the backtesting is useful and some really good tips and ideas and ways of thinking about things to take into your backtesting, and hopefully it has provided you some value. And the other thing I do want to reiterate is that when I talked about the time thing in terms of you getting profits within sort of 6 to 8 hours and you getting a bit disgruntled if it's 45 minutes and you've not made any money in the live market, the same does apply to losses as well. Because remember, you could take 4 losses on the trot when you're backtesting, and those 4 losses could overall, let's say, take 40 minutes in terms of your overall backtesting period. But when you're in real live markets, that could have taken 6 to 10 hours to take that loss. And imagine that times 4, you know, 4 losses over the course of 10 hours over the course of, let's say, 5 days. You could feel really bad and your mind could go to a real bad place, you know, when you've seen that. Because when you're experiencing it real time, you're feeling the pain second by second, minute by minute. So that's another thing to remember, is that when you are taking losses, still refer back to the backtest and go, okay, brilliant. Well, my win rate was 50%. I know that I'm going to lose 5 potentially on the trot on average. So therefore, you know, how long did it take me to take those losses before? 8 hours, great. And you're only sort of, you know, a couple of days into the week. You know, it just gives you a bit more reassurance so that you know that it's part of your strategy. If you've got a 50% win rate, but you're still profitable, that is your strategy. So it's just a byproduct. The losses are a byproduct of you actually making money, and those things that you need to really ground in yourself. So hopefully you can see why the journal is so effective. You know, you can understand, you know, what my average drawdown was through my trades, what my average profit is during my trades, what my average win rate is, what my sort of mentality is, right? What sort of days I trade well, what sort of weeks I trade well, what sort of months I trade well. There's so much data that you can take, so as you're kind of half expecting all these results as you're going into a live market, and sort of expecting and knowing, you know, the devil you know is more powerful than just going into something where you have absolutely no idea what's going on and you kind of think it's all complete chance. Now, of course, you don't have any control over the market, but ultimately by doing all this backtesting, you know, you will have more confidence and more understanding, and you will see more scenarios where you can refer back to them to give yourself more confidence. In often cases, you know, if you do backtesting well, you'll find that in the majority of the live markets, apart from when things are completely evolving and when there's huge, you know, international news going on, it will roughly mirror exactly what you've done in backtesting. It's the same behaviors and the same pairs and this, that, and the other. But just the bit that you won't be used to is the nail-biting part of having to actually endure 8 hours until you get your profit or your loss. So always just bear that in mind. There is no magic cure, but my advice is just don't stay glued to the charts. Like, once you put the position on, if you know it's going to run for about 6 to 8 hours, you've calculated your risk, you know where your stop loss is, you know, only look at the charts at different positions or new opportunities or this, that, and the other, but just don't stay there. And if you've taken the entry on the 1 hour and all you do is take entries on the 1 hour and you monitor it in the 1 hour, don't start going down to the 15 and the 5 minutes, because it just shows you more fluctuation. It's not good for your mind, and you'll probably end up cutting the trade too early in most cases. Okay, I'm going to leave it there. I think this one's been quite a long one. Bit too long probably, and I've probably lost most of you by the end of this one, but hopefully, you know, for the people that are, you know, committed to it or enjoying the content, you've got this far. I hope it has provided you some value and some context into what backtesting is, how you can backtest, and things to consider when doing it. Now, with my second video that I'll post, I'm going to do an entire backtesting session, full screen share on there as well, so you can understand what I'm doing, and I'll talk you through it as well. So make sure that you tune in and make sure that you've got the alerts turned on, so as you're alerted for when I do post that one. I feel, as I said earlier, that my backtesting process is a lot simpler than a lot of other people's, and I don't put too much data in because I don't like to overthink things too much, but people that are very data oriented, obviously you can put as much as you like in there. Cool. So guys, thanks for staying with me for this one. If you are enjoying the content, please just hit that likes up button. It really does mean the world to me and really does keep me creating this content and giving me the encouragement and also the YouTube algorithm on my side to make sure that this channel can keep growing and keep giving you the information, the value that you want. Subscribe to the channel if you haven't already, and make sure that you do click on the alerts as I just said, so as you're always alerted for my next video. As I said, there will be a second video on the backtesting. There will also be a video about how I manage my FTMO account, and also a video on my strategy breakdown and a couple of trades that I've taken in the last couple of weeks, so you can see how I looked at the setup, how it played out, and roughly how my mind operates. If you've got any questions, comments, abuse, hurl it in the comment section below as always, and if not, grab me on my Instagram at @MattToMillion for all of my daily trade updates and posts, and I do try and get through my DMs every single week. But if I don't speak to you before, have a great one, and I'll catch you on the next video. Take it easy.